Let me show you something. Gold buyers, gold sellers. Let me show you something. First of all, take a look at the retail trader. The retail trader is so positioned long on gold, and that has me really scared. Okay. If we know retail traders are buying the gold dip aggressively, look at this, guys. 77% of retail positioning, at least according to the data that we pull from a couple brokers and sites, 77% is on the long side. If you know that average amateur traders that typically lose money, they're all piling into longs on gold, that to me is a major red flag. Now, does that mean gold has to go down? No, it just means be super cautious. As we approach this NFP number, which is about a minute and 15 seconds away, I want you to understand that if this thing breaks lower, there is no reason why this now becomes a new level of resistance. And we could actually even see sellers stay strong and continue to squeeze the retail trader, which is very, very long. And by the way, guys, you know, we saw on the fundamentals, we saw the COT report show us that smart money has been selling gold in the recent filing. Take a look at this. You know, you gotta keep an eye on the COT data. It's really important stuff. The gold, right? Gold market minus 3.56 bearish flow. There's a big sell that came in on gold in the last filing. So as we approach this, just be very cautious. It doesn't necessarily mean it can't go up, but let's get now prepared for the release. And guys, don't go anywhere. We've got coverage for the event. I've got the numbers on the screen for you. We'll watch the spike. The US, let's put SPX 500 top right. Let's put dollar index bottom right. Let's put Euro USD bottom left. Guys, we've got our charts pulled up here. We got breaking news coming in. Guys, and we are moments away. And there it goes. The dollar index is up. Gold, there it goes. Gold initially. Ooh, this is starting out poorly. Let's take a look at the numbers, see if we have them in, guys.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Jobs numbers are pending on Forex Factory. There it is. They just came in. We got unemployment rate coming down 5.5%, perhaps a bit weakening. I'm sorry, this is for CAD. CAD numbers did come in, both showing some cooling in the labor market, actually strengthening in the labor market for CAD. Take a look at non-farm. Oh my goodness, guys, that is dollar bullish right there, right then and there. I don't even need to see the other two numbers. Yes, they matter, but this number, that is incredibly dollar bullish. That is incredibly dollar bullish. Is that what I wanted to happen? No, not necessarily. I have a lot of bullish options going on for indices. So ideally, it would have been nice to see some cooling numbers, but it doesn't matter what I want, guys. What matters is the market sees hot jobs numbers, and there's the breakout that we discussed moments ago. There it goes. Yet again, I mean, the EDGEFINDER has been calling for dollar bullishness. So this is, not necessarily a surprise. What we see here is the dollar is popping through resistance at 106.5 with ease. And this is a huge number. This is a huge number. We were expecting, guys, the labor market to cool. 171 was what was forecasted. We got 336. That's a lot more than expected. And this is going to scare the markets. Why is this going to scare the markets? Why is it going to? Because Hot numbers means the Fed is going to have to continue to keep those interest rates elevated until the labor market cools. Now, we did get some unemployment tick up. We saw 3.8%, so this is creeping higher. But average hourly earnings, this is actually also kind of what the Fed wants. They want a little bit cooling on the wage raises, because of course that is inflationary. But this is incredibly inflationary. A huge number of people getting employed. And this is bullish dollar, bearish gold, bearish indices, at least for now. And, again, EDGEFINDER, this is what the EDGEFINDER was calling for this morning. Bullish on dollar yen, CAD yen, which CAD yen probably flying, right, guys? CAD yen's probably flying off of this, I would imagine. Yeah, there goes CAD yen, dollar yen, CAD yen, the EDGEFINDER bullish across the board on dollar crosses. You take a look at Euro USD bearish setups, pound dollar bearish setups. The S&P, the Dow, the Nasdaq all have been bearish. So the EDGEFINDER has been very correct. All this does is it calls into question, well, how much longer is that interest rate going to remain elevated? So I guess walk me through, Eivind, in terms of biases. What does this direct you to the most? Are you looking at a certain currency pair? If you'd like to share your screen, I see you've got something pulled up that you could share with us as well if you'd like.
Well, I'm just showing the actual report. Can't do whatever. So what the labor and statistics says, that it was an increase in government, healthcare, professional, scientific, and technical services and social assistance, and especially with leisure was the biggest one that added 96,000. So I don't know what Disney has pulled off lately, but yeah.
Yeah,
bit of kick there, but also it leads to shorting dollar pairs. Right now it's very low, and I saw that you were stopped out, and I think that was very early, wasn't it? Well,
yeah. In hindsight, Eivind, I wish I shorted right at the top. But of course, the fortunate side for me is I took a really small trade, and I've been doing this lately. Frank and I have talked about this. I oftentimes take 2 or 3 times to really get into the trade that I like, because I've really got pretty tight stops. So unfortunately, it broke through the 618, took me out, proceeded to go on without me, but I'll get the next one.
Okay. So this should have been in a midship class today then, because I'm not saying that you sell there, but people have sold them like that is not where we sell. This is not where we sell. And we should sell at least either the lows of that one or the lows of this one. And this is the aggressive one. This is where you are allowed first time to be thinking about it in my standards. But okay, but fair enough. So it leads me to CAD yen actually. Why does it lead me to CAD yen? Or dollar yen for that matter? Because we are still dollar bullish, yen bearish. Well, there has been a bit of a volatility lately, but this is the best trade out there. Carry trade and fundamental trade. That's where it leads.
Fair enough. Yeah, no, that makes sense. And I think with the dollar yen, you've got a really interesting added dynamic with the Bank of Japan, and they're threatening for intervention. I've been pretty vocal. I think that 150 breakout, if it were to occur, would be a major trigger to the upside even.
150?
Yeah, because, if 150 were to break and confidence in the Bank of Japan's ability to really suppress the exchange rate was called into question, I think the popular trade is to be short dollar yen at 150. And I think that if that popular trade unwinds, it could be similar to the S&B situation with the the Euro Swiss back in early 2015, which caused, major brokerages to shut down. It's just something to think about.
Well, why did they shut down though? That was their own wrongdoings, wasn't it? FXCM.
Yeah, and then Alpara. You had several brokerages that went down, and it was a lot of due to the fact that, again, they were taking the other side. The liquidity simply wasn't there all of a sudden. They had all the positions of the clients that were long. There was like moments or in the hours leading up to the unwinding Euro CHF, the retail trader actually was incredibly long on. And with that, if the retail traders are all long, The brokers are the ones kind of that get stuck in situations where they have to buy it back from them.
When you don't put orders into the real market, weird things happens, like bankruptcy.
Yeah, no, you're right. You're very right. So I want to go to Frank too on this. Frank, we had jobs numbers again, the dollar 106.85 almost being printed. That is a major pop. And again, it's looking so incredibly daunting for anybody who's dollar bearish. What do you think about this? And do you have any charts that you're kind of gravitating towards?
Yeah, so I guess that kind of reignites a bullet or bearish view on gold again. You know, I've been bearish on it for a while, but I was hoping that, you know, seeing ADP and unemployment claims sort of that were pointing towards less jobs added would eventually lead to NFP showing us some relief, but obviously that wasn't the case. So I don't know if ADP is, I mean, obviously it's not a very trustworthy indicator, but I think it's when looking at those numbers, it's probably good to just ignore it entirely and to not focus on what ADP is saying, because it's been consistently wrong. So just whatever you see on that side, just, I guess, take it with a grain of salt, wait for NFP to actually come out. But I'm still hovering in my S&P long, but if it breaks lows from yesterday or the day before, then I'll be stopped out. But otherwise, like, you know, it's hard to tell because unemployment rate also went up. So just some mixed data here. I'm not really sure exactly what to think, other than these indices, gold, they're at these significant levels of support. So until that gets broken, it's hard to say that I want to, you know, sort of go into a bull or bearish trade on any of these. So I don't know. I'm looking at indices, gold, probably some USD pairs, but after today's NFP, it wasn't very promising. So
I think one thing to add there, Frank, when it comes to the unemployment rate, I know that that's probably going to be a little bit of a confusing figure for people. So I'll show you guys this really quick just to give you the simplest explanation I can on that. The reason suggested for why this number, unemployment rate, can go up while at the same time way more people than expected can be hired. The reason for that, the hidden component that you can't really see very easily, is the participation rate in the labor force. If many more people are looking for jobs, then many more people are going to also file for unemployment, and many more people are also going to get jobs. So just something to think about. You know, when you see this number, I know this could be very confusing to people. This does show that more people are proportionally to the people looking for jobs unemployed, but still this number I think kind of trumps it today, obviously with the dollar shooting up so much. The 336,000 jobs, I mean, that is a lot of jobs created compared to the 171. And again, I think all of us, all three of us, would have liked to get some cooler jobs numbers finally, because the somewhat frustrating thing about this is that we don't really get a major, you know, labor market. I mean, this is it for the month. For the month of September, of course, we get our labor statistics the first Friday of October, and it's one of those things. I think the market is picking up on that. We do have CPI around the corner. That's another one that could be, you know, something to consider. But with this NFP coming in so hot, it just beckons the question, you know, how long is this situation going to go where the Fed is, you know, faced with a really strong labor market, which is going to basically plateau how low inflation can get. I mean, that labor market has been said over and over. They need that to crack in order for inflation to really get down to that 2% target. It is very rare. I don't really see a situation in which they can get down to their number without the labor market easing in some way. So that is probably why there's so much weight being carried in this move. Again, you have a major push to the downside on the NASDAQ, all the indices down, S&P, Dow. Again, I will say one redeeming factor for this is we still do have, seasonality is expected to pick up in Q4, and we do have CPI numbers around the corner. So it's not necessarily, this is just all over for the indices, because look, we've still got support looking left. If you're really bullish, if you think inflation could still cool, there are some disinflation stories still intact. And if we start to get that bounce, if we start to get that push off the lows, this could be a wonderful buying opportunity for the remainder of the year. But I think for traders right now, short term, this price action is looking a little bit tough in my view. You take a look at gold, to your point, Frank. I mean, this same concept is what I was thinking as well. This reopens the door for possible gold shorts upon a breakout and retest of this support level that buyers have been holding on to for dear life. I mean, this is 1813. It's like has been just trying so hard to get a bid, and even with some dollar weakness coming in, gold has not been able to catch any bounce whatsoever for the most part. So it's interesting to watch on that front. Eivind, what else are you watching? Again, do you think that there's a chance that, I know the indices are kind of an interesting story right now. Do you think there's any chance that we start to get possibly like a double bottom on some of these oversold entities like the NASDAQ and the S&P?
You can only hope. You can only hope. Right now, it doesn't look like a lot of hope. Right
Sure.
now, it looks like Jesus takes the wheel, to be honest. But holding on for dear life. Because if you look at my entry, which is around here, which I thought was going to be the reversal, it's not the reversal. So I don't know. You tell me. Can it?
Yep.
It should be, but this is not a reaction. This is not what I wanted to see. So it's kind of like, okay, maybe we make an even new lower low and then we rewind it back up again. But this is a trade. Come on, it's not that bad.
Yeah, no, it's one of those things that, like I said, I think all of us were hopeful that we would get some cooling jobs numbers, but again, sometimes the market just does not care about what you hope and what you want.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.